We are back looking at a recap of the financials that have been coming through the NSE this week. It's a mixed bag for the insurance sector. Jubilee was down 1.5%. On the flip side, Liberty was actually up almost 36% with regards to profit after tax. To help us understand what's happening with these numbers is Mr. Ian Kagiri. He is an investment analyst with Cytonn. Before we took a break, we're just looking at Jubilee, and you're saying there was a decline on the investment income, and this actually pushed down their numbers down 1.5%. But then they did declare a dividend, I think, of about 1 shilling per share.
Yeah.
Was that unchanged? Were you expecting that?
Yeah, it was expected.
It was expected.
Yeah.
Okay. Then on the flip side, Liberty actually did very well. What was happening there?
For Liberty, what we've seen that as well, good top-line performance on the premium front. Expense-wise, claims expense, however, rose approximately 6%.
Wow.
But the overall bottom line was aided by the recovery in investment income. So they actually backed the trend that we've seen across other insurance players who have been recording declines in investment income. And in fact, if you look at Kenya's insurance sector, rather, you'll find that most insurance companies tend to survive by float. In other words, they depend a lot on the investment income.
Wow.
So whenever we have a bearish sort of run at the NSE,
Then
it will impact, definitely it always impacts.
So what was the difference for Liberty? Like, where did they make their money from?
Yeah, they had to disclose, but what we feel that perhaps some of their securities they held, perhaps most probably some of them are not in the local market.
Okay.
Or perhaps probably they have they had an agile portfolio management active style, whereby they probably sold off during the bullish run, and then they entered in the market.
So something worth exploring.
Yeah.
And then we can maybe briefly touch through the Britam numbers. I think they came out the week before, but they did have a briefing this week. I don't know why did you attend that?
Yeah, that for Britam I didn't attend, but relatively tepid performance for them. They've recovered sort of from the huge write-offs they had last year in investments in HF and last year. So for them, we still feel that it's wait and see. Okay,
wait and see.
Yeah.
So insurance sector really just wait and see what's
insurance
happening
sector,
there.
wait and see.
Largely because of the risk factor affiliated with investment income.
Investment income as well as claims expense.
As claims as well.
Yeah.
Okay, another interesting one. I mean, it feels like I'm just taking you through a myriad of numbers.
Yeah.
Trans-Century, this has been a company reporting losses.
Yes.
There was a positive number this time round.
Yeah, they've been reporting. The last time they reported a profit was in 2014.
Wow.
Yeah.
That's a very long time ago.
That's a very long time ago. So for them, we feel that they've largely been aided by the debt restructuring they had early on.
Take us through this debt restructuring. What has happened there?
In the debt restructuring, basically what they did for the parent, for the subsidiary, EA Cables, their debt amounting to what, 1.8 billion. Some of it was to be waived off, a portion. And they would also put a moratorium on repayment in the principal for 2 years, so they were not required to repay the principal in 2 years.
Okay.
And also a 6-month moratorium on their interest payments, so they hold off paying interest for approximately 6 months. So what this did is it significantly reduced the finance costs of the subsidiary.
So these are not good numbers then?
Yeah, so I feel positive.
How is it positive? Because what you're telling me is this debt restructuring is only pushing the problem away for 2 years. Yeah,
what this restructuring will actually do is that they tend to have a large order book which they cannot satisfy because they also have the finance cost.
And this is East African Cables?
Yes. Okay. So and given that they are a subsidiary of Trans-Century.
Is it a fully owned subsidiary?
No, they own 68%.
Okay.
Yeah.
Okay, 68% ownership.
So, yeah, 68% ownership. So, the performance of the subsidiary is important, especially for the parent company.
That's true.
Yeah, so I think...
but Ian, if there's no top-line growth, it's like saying in your own household, you're not really growing your revenue and you've talked to your bank and you have breathing room, unless you show us that you're doing something.
Yeah, it's not sustainable, but if you look at their top-line revenues, it grew by around 10%.
10%, okay.
10%, but they've also come out and said they have a large order book of around 5 billion that they are yet to exploit.
All right.
So we feel that these may aid, once they unlock that order book, it may bring in more revenue. Their costs as well, they should, administrative costs relatively managed. But for sustainable growth, obviously, you need to have.
So we look at the we
expanding
just keep looking at this company, but then the core for this financials is actually debt restructuring.
Yeah, the core
Okay.
for it. Let's not read too much into it,
Okay,
because
fair
the core
enough.
was debt
Fair
restructuring.
enough.
Yeah.
Now coming back to the elephant in the room, or the platform, really, the market that provides, the company that provides a platform for trading for all these companies. That's the NSE, the Nairobi Securities Exchange.
Yeah.
It also announced its numbers. I think those were down 82% year on year. What are your views on this?
It's no surprise because market has been relatively subdued. There's not been too much activity, especially from this end of the first quarter onwards. Low domestic investor participation as well, low demand. In fact, a huge chunk of that performance has been attributed to a decline in equities trading,
Okay,
as well as the rising costs.
that's true.
So
For the new platform, I suppose?
yeah,
Okay.
for the new platform. So yeah, given that the market tends to be cyclical in nature.
That's very true.
So with low trading activity, we've seen there was a lot of diversion. A lot of the activity was centered around the fixed income segment, the bonds trading. So despite the fact that it rose, but if you look at the actual commission income they get from bond trading,
It's
is
really
very small compared
Okay.
to equities.
So it's such a mixed bag. Out of all these companies that we have discussed today, it's only one that has given us spectacular performance, and that seems to be one-off. So what's your sense? Is the economy doing well? Should people be putting their money into equities or pulling it out and putting it into fixed income?
You get the sense that the current performance is sort of a true reflection of the economic state of the economy. There's been that, if you ask anyone today out there, they'll tell you that the economy has this sense of tight operating condition.
Yes.
Yeah, things are not looking up, but from where, in my view, where I stand, this has largely been impacted by a lack of credit flow.
Lack of credit.
in the
Okay.
economy.
But then the NSE 20 10-year low, so do we go buy? Is there value in there, or really do we just keep away from equities for now?
For now, obviously, valuations are really, really attractive.
Yes, they are.
Yes,
they certainly are.
But what I would advise anyone is selected counters are the ones which have very stable fundamentals, cheaply valued.
Top picks?
Top picks.
What are your top picks?
I'd go for KCB.
KCB, okay.
Yeah.
Fair enough. So you're telling people to look at KCB.
Look
And I
at
think as we
KCB.
wind up on the conversation, our time is almost up, but then do you have a sense of what was happening on the government auction yesterday?
The auction acceptance rate around 80 something
80%,
percent.
about
80%. About 80%.
Okay.
Acceptance rate was, the government really doesn't seem to be in any hurry to accept any bids. They continue to reject
Okay.
all the expensive bids. For them, you feel that there's too much liquidity in the market to pick from.
Okay, interesting.
So they are not really pressured in terms of where to get credit from and at what cost.
All right.
Because there's a lot of people offering them money. So
there's no. So what you're saying is that this yield curve could actually come lower.
yeah, probably.
So then, really, what are you telling your investors? Put your money in fixed income, or just bring it back to equities because the bottom is near.
I'd focused more on the medium-term fixed income.
Okay.
Anything from 5 years, 5 to 10 years. That would present the best investment strategy for investors, as
Okay.
well as focusing on counters that present the protection in terms of dividend,
All right.
high good
fantastic.
dividend yields,
Yes.
and present also room for capital appreciation.
Room for capital appreciation.
Yeah.
Okay, there you have it. Thank you so much for joining us on a Friday. I think we are certainly looking out for inflation numbers, because the 91-day is at 6.3, inflation is at also 6.27. So really, there's no return there.
Yeah.
Okay, fine. Ladies and gentlemen, there you have it. The economy is not doing too well. The numbers that are coming out are actually reflective of what's happening in the economy. NSE is on a 10-year low, but then the valuations are looking very interesting. From Ian Kagiri, who's an investment analyst with Cytonn, he thinks there's more value to be unearthed on the KCB counter. And if you're looking at fixed income, then the key number to be looking out for is annual inflation, which comes out today. Join us again on Monday, 2:30, as always. And if you've not been able to watch this, stream live again on our Facebook and on our YouTube Metropole page. Thank you, good afternoon, and enjoy your weekend.